between the two.
Okay, join us now, Alec Young. That sounds like an actor, like from Bridge Over the River Kwai. What was Alec going to say? Anyway, managing director. It's a cool name.
It's a good name.
Thank you. It is, isn't it?
There's
like you
something
could
cool
pick.
about it.
You could pick that name if you didn't like your name. You know what I mean? Anyway, managing director of global markets research at FTSE Russell, and our guest host Liz Young. That's a pretty good name too. Director of market strategy.
No relation.
That's right.
Could be. Could have been.
So
I was going to ask.
BNY. You're not married.
No.
Okay. All right. Who's
Like
right?
an awkward cocktail party.
Yeah. Who's
Like an awkward cocktail party.
Well, I am, but not to Liz.
okay?
Now it's gotten more awkward.
Bond market or stock market? Liz, what do you think?
I agree the bond market has been catastrophizing a little bit, especially over the last...
Yes.
It is a good word, right?
Awfulizing.
Awfulizing. For the last year and a half or so. And it is true the bond market's typically ahead of the stock market. I think the other part that you have to remember is that we still, although at 150-something on the 10-year, is 150 above a lot of other nations. So there's going to continue to be appetite. It's not necessarily all fear-driven. It might be opportunity-driven from a yield perspective. So I do think it's still okay to be in stocks here. I don't think we're done with some of the pullback from coronavirus.
I think the Fed is a big part of the low bond yields, too. If Powell signals, more of a wait and see tomorrow, I wouldn't be surprised if long bond yields have been very sensitive to the Fed perception. So I think the bond market is expecting Powell to give a nod to the virus. Yeah. So I think if he takes a more wait and see approach and doesn't validate that June rate cut or that July rate cut, I think you'll see bond yields.
For the record, they did already, right? They already noted that in their monetary policy report to Congress that the coronavirus is a factor they're watching.
Yeah, but it's a real-time situation, so they want to know what's the latest real-time sense, and we get that tomorrow. What you're talking about, a week during coronavirus time is like a year of regular time.
Let me just propose another way, though, where you can kind of bridge these two things, which is within the entire global, sample of markets. The U.S. market is perceived as a haven, both because it's got more resilient growth, and within the U.S. market, the huge tech stocks that have been running the show for a while are considered a haven within the stock market. So if you look at what's really been working, it's the kind of stocks that maybe are more insulated or perceived to be more insulated from this kind of macro threat coming out of Asia. Right. Does that make sense? Or
it does make sense. And
not that means valuations can go to the moon, but yeah.
Right. Well, and that's a whole other argument that I'm still kind of behind, that just because tech has outperformed for a long time doesn't mean it has to stop. And in a year where we've done 2 trade deals now, we've got economic fundamentals behind us, we have earnings fundamentals behind us. Why wouldn't you still own tech stocks? And we've had some pretty big pullbacks because of the virus, and tech is still the best performing sector in the index.
One thing that's interesting within tech, it's the asset light. So it's more of the cloud software. The hardware makers have supply chain risk in China. So differentiate a little. One thing I would note, late in the cycle, you tend to get, it's more of a momentum-driven market. There's more of buying things because they're going up. Right now, I think we're still hooked up with fundamentals, but we're starting to see signs of maybe detaching from fundamentals a little bit. So, yes, tech is where the organic growth is. It's less vulnerable to some of these issues, especially on the software side. But, a name like Microsoft, these things are all in the market.
Yeah, I wrote about Microsoft this week. It's the stock for every purpose. Yeah. Everyone loves it for their own reasons, and it's now at a 20-year high.
I just think the easy money's been made in this market.
Is there something, Alec, that would change your mind in terms of the data that's coming out regarding the coronavirus? I was reading a piece over the weekend. The economists now are forced to be epidemiologists, right? There's all of these new metrics they're looking at: infection rate, morbidity rate, virality, all this stuff that they never, ever had to deal with in the past. Is there something that would truly scare you and make you concerned about the effect of coronavirus on U.S. equities and growth?
Sure. I mean, I think at this point I've been struck that the market's really taking this in stride. Any sign that this can affect domestic U.S. economic activity. So talking to Scott Gottlieb in the green room, actually, about potentially like dozens of cases in New York City. I wasn't aware of that. So I'm a little nervous because this is such an uncertain, hard to predict thing, and there's an incubation period, not to get too complacent about it. But I think the key is really the market saying it's an Asia-centric event. What we lose in Q1, we pick up in Q2.
What the bond market's looking at here, which is the thing that they're saying the equity market's not picking up, is the production effects and the lack of supplies, imports, and exports, the decline of trade that's going to come and hit the U.S. economy from that, and thereby perhaps earnings.
I think the equity market gets that. They just think whatever they lose now, they'll pick up later, that it's kind of a zero-sum game. I think the bigger risk is if it starts to hit U.S. economic activity, if people start cocooning, traveling less, then I think equity investors have to broaden the lens of what this could do to
So if you had to pick something that Powell might say that could be interesting, if you just had to pick, would it be
You're acting like it's Powell's fault.
Would it be coronavirus?
This is mandated.
Would it be the jobs number?
Well, I think the market's prepared for coronavirus.
Would it be the jobs number?
I think if there's distance between this idea of a 50% probability of a rate cut,
I want to change
and Powell sort of distances.
I want to change the law. How often do they do these two-day things?
Twice a year.
I think once.
No, it's accountability, it's
once
democracy, it's transparency, it's what we
saw
need.
the latest thing talking about Greenspan, how he deliberately didn't say anything. Now it's all we do is blah, blah, blah.
Yeah, well, that really didn't turn out that great for Alan, did it?